Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. Today we are going to discuss about the Islamic banking operations and instruments. First of all, how are you guys? I hope that you can catch up with our online class. So in today's discussion, we expect that the students are able to explain the sources and the uses of funds. Secondly, we expect the students to be able to explain the contract used in savings and current deposits as well as interest financing. So this is some of the basic products of the Islamic banking institutions. So we are going to discuss about the savings and also the current deposits. And also we are going to see the application of selected principles of Islamic finance in the products and offerings of the banking institutions. So before we move on to that question, so it is important for us to understand the question whether Islamic banking is really unique and whether Islamic banks are different from the conventional banks. So in this session, we are also going to distinguish the unique characteristics of Islamic banking operations and instruments. So is Islamic banking really unique? So before we answer this question, so it is important for us to see the demand of Islamic banking products and services at the moment. So we see that in terms of demand, especially in terms of assets, we can see the assets of Islamic banking is growing. For example, in 2006, the total assets of Islamic banks is amounting to USD 549 billion. And then subsequently in the year 2007, the amount of assets has been growing to USD 758 billion, followed by in 2008, the growth of assets for Islamic banking institution globally reached USD 951 billion. So this shows the increased demand for Islamic banking products and services, not only in Malaysia but also throughout the world. So with regards to the Muslims, the demand is actually due to the fulfillment of commandments from Allah Subhanahu wa Ta'ala. As we have discussed in our previous discussion, Allah Subhanahu wa Ta'ala stated in Quran, wa halallahu al-bay'a wa harrama riba, and Allah permitted sale and discouraged the riba. So from this ayah we know that Allah's commandment towards Muslim is to avoid the practice of riba in their daily life. So using the conventional banks is actually agreeing to the riba practices. So that's why with the establishment of the Islamic banking institutions, so Muslim do not have any options anymore, so they can easily choose the Islamic banking products and services. But for non-Muslims, the demand from non-Muslim is actually because of the benefits that Islamic banks offer to its customer. So in general, the business or the function of Islamic bank and conventional bank is similar, whereby both banking institutions offer their function as a financial intermediary. So what is the function of financial intermediary? So function of financial intermediary, the bank intermediate money from the surplus unit, from the surplus unit here to the deficit unit. So those who have surplus of cash, so what they will do is they will deposit their money to the bank, and then subsequently the bank will analyze any application from the deficit unit and channel the money that they got from the surplus unit to the deficit unit. So how bank makes money? So banks make money from the spread between the profit that they charge to the deficit unit and the profit that they give to the surplus unit. For example, if bank charge profit to the deficit unit of 8%, and then they pay profit to the surplus unit of 3%, so the spread, the difference between 8% and 3%, which is 5%, so this 5% is going to be the bank's revenue. So this is similar to what is performed by the conventional banks. So the question is, what is the difference between Islamic banks and conventional counterparts? So before answering that question, so the bank offer a products to the surplus unit through its deposit and investment products. So this is going in terms of reporting, financial reporting, this is going to be reported under the liabilities of the banks. Whereas for the deficit unit, the bank offer financing products to the deficit unit. So all the outstanding transaction will be recorded as the bank's asset. So the difference, what is actually the difference between Islamic bank from the conventional banks, and how Islamic banks is unique from its conventional counterparts? So the difference is actually lies in its unique nature and operations and also the activities. So for Islamic banks, there are certain requirements that they need to fulfill, where they need to ensure that their nature of operations and activities comply with the Sharia principles and rulings. For example, on the liability side, we see the balance sheet of Islamic banks. For example, in terms of the liability side, there are several products that is available under the liability side, such as the demand deposits. Demand deposit is savings account and also the current account. And then you have investment accounts, special investment accounts, and also capital, equity, and reserve. So for Islamic banks, all these products offered under this liability sides will need to fulfill the requirement of Sharia. For example, if they use the contract of court or Mudarabah or Wakalah, so they need to fulfill all the requirements of these contracts. And each and every contract has its own features and characteristics. Of course, this will affect the contractual relationship between parties involved, between the banks and also the customer. So there are certain requirements that follows the contract that being utilized in the products offering. Hence, the underlying features and contractual relationships, mechanisms, and applications of Islamic banks products are not identical to its conventional counterparts, which is the conventional banks. For example, in terms of contractual relationships, Islamic banks are inclined towards equity-based and also debt-based financing, whereas the conventional banks are inclined towards debt-based financing. So as interest is prohibited in Islam, various contracts are used by Islamic banks to offer the Sharia compliant products. So this can be seen from its balance sheet. So under the liabilities we have explained just now, and then under assets we have trade financing, we have salam contracts, we have Murabahah financing. We will see the application each and every contracts in the future slides. And then we also have Ijarah financing, Istisna financing, Mudharabah financing, Musyarakah financing, and also the banks can offer services-based products, which is offered using the contract of Wakalah or Ju'alah, and also Kafalah. So all these underlying contracts have different criteria and characteristics, making the Islamic banks unique from its conventional counterparts. So as I mentioned earlier, that most of the products offering of the conventional banks are offered utilizing the debt-based contracts. But for Islamic banks, we have several category of products. For example, the Murabahah, Salam, Istisna. These are the Salam, Murabahah, Ijarah, and Istisna. So these all are debt-based. These are debt-based. In contrast, the Mudharabah, the Musyarakah is an equity-based. And under this part is the services-based products or fee-based contracts. So what are the characteristics of Islamic deposit instrument and their underlying principles? So we will see the instruments and underlying principles that have been utilized by the Islamic banks for its deposits. So there are several types of Islamic banking deposits. We can categorize it into four. The first is the savings. The second one is the current account. The third one is the term deposits, and last but not least is the investment deposits. So for savings and current accounts, savings deposits and also the current account deposits. So mostly the difference between these two, the savings account is normally offered to individuals customer, whereas the current account is normally offered to the business customer or partnership or even society. So they are going to open the current account products. So both products are normally offered under the contract of either qard or Mudharabah. But I think nowadays most of the products has been offered under the contract of qard. So this is to replicate the actual nature of relationship between the bank and the surplus unit. And then we also have the term deposits. Term deposits is normally offered under the contract of Mudharabah or Wakalah or commodity Murabahah. So commodity Murabahah is the latest, it's not latest, but it's the most recent contract which has been offered by Islamic banks under the term deposits products. And then we also have another type of deposits, which is investment products, investment deposits. So for investment deposits, the bank is normally offered the products under the Mudharabah contracts and also the Wakalah contracts. So this is the name of the products, normally generally generic products named by Islamic banks, such as the Mudharabah General Investment, Wakalah Unrestricted Investment, and also Mudharabah Special Investment and Wakalah Restricted Investment. So what are the salient features and modus operandi of the Islamic financing instruments? So if we see here, generally the Islamic bank financing can be categorized into two types. The first one is the retail and also the corporate. So this refers to the target group of the financing of Islamic banks. So for retail is normally like individual, individual customer. So all individual customer is normally categorized under the retail products. And for the corporate customer, business customer, so they falls under these products. So normally for retail customer, for individual, so they required products such as the home financing, the personal financing and automobile financing. Whereas the corporate customer, the business customer, so they need products such as the working capital financing to finance the working capital of their business. And then they also have term financing. For example, they want to purchase an assets, machine factory, so they can use this term financing. And then also we have another type of products under corporate customer, which is the trade financing. So for home financing, Islamic banks offers products under the musyarakah mutanakisah. Either under musyarakah mutanakisah, istisna is an order sale by order sale products. And then we also have BBA, buy bisaman ajil. And then we have tawarruk. Also, for the personal financing, so banks are offering products under the BBA, buy bisaman ajil, and also the tawarruk. And then another products we have here, automobile financing. So for automobile financing or vehicle financing, so the banks are offering these products under the contract of Murabahah and also ITAB or Al-Ijarah Thumma Al-Bay'. So some of this product has been discussed by your friends in the group presentation. I would like to stress here that the contract of BBA, so before this the contract of BBA has been widely used by the Islamic banks in Malaysia for its products offering, but nowadays the Islamic banks are reducing the application of BBA and they are moving towards the tawarruk products. So if you can see nowadays, most of the products has been offered, the personal financing, the home financing, and even sometimes you can also observe that some banks are offering the automobile financing under the tawarruk products or tawarruk contracts. So for corporate customer, for the working capital, we can see they use the contract of tawarruk or inah and also the murabahah. So because the working capital is normally the corporate customer would like to have additional cash, so that this cash can be a capital to fund its working capital. And then we have term financing. Term financing is normally for the purchase of assets. The Islamic banks offer these products under the contract of Murabahah and also Ijarah. And the last but not least, the trade financing. We can see Islamic banks are using the contract of Murabahah, Wakalah and also Musyarakah. So each and every contracts used or utilized by the Islamic banks have different characteristics, different mechanism and different effect to the bank and also to the customer. So each and every contract have specific or unique characteristics. So both contracting parties, which is the bank and the customer, need to follow the requirement of Sharia for each and every specific Sharia contracts that has been applied in the products. So here we are going to see how the modus operandi of Islamic banks products being suited or being structured using each and every Sharia contracts that is available in Sharia. So the first product that we are going to see here, the modus operandi of the Musyarakah Mutanakisah home financing. So Musyarakah Mutanakisah means the diminishing musyarakah or diminishing partnership, whereby the ownership of one entity or one partner are reducing from year to year until the end of the financing tenure. So the total equity of another partner is going to be 100%. So if we see here, the first leg is Musyarakah contract is entered between the partner, the bank as one partner, and the customer as another partner. So each and every partner contributes to the Musyarakah venture. Musyarakah venture. So the Musyarakah venture is actually with the purpose to purchase a property. In this case is the house. So in this example, so the customer is contributing 10% of the house price as in the Musyarakah partnership, and the bank is contributing 90% as their capital for the purchase of the house or in the Musyarakah partnership. So here the equity or the share of customer on the property is 10%. So we call this as capital contribution ratio. 10% capital contribution from the customer, 90% capital contribution from the bank. So with this, the percentage of equity, the ratio of percentage of equity between the customer and the bank is 10% to 90%. So the customer is owning 10% of the Musyarakah of the partnership, and the bank is owning 90% of the share of the Musyarakah or the partnership. And at the same time, the customer will enter into Ijarah agreement, whereby the customer will also rent the property or the house from the bank, whereby the customer rent 90% of the bank ownership on the house. So with the Musyarakah agreement signed, so the partners, the partnership will purchase a house. The partnership will purchase a house, and then for each and every month, the customer will also pay the rental. Monthly, the will pay monthly installments to the bank. So the monthly installments will be categorized into two. So in the monthly installment, there are two separate purpose of the monthly installment. So the first purpose is for equity purchase, whereby the customer will purchase the equity of the bank on the house. For example, 90% the first year of the financing. Towards the end of the financing, so the customer will purchase the equity of bank, which is this 90%, the customer will purchase um, a bit by a bit. And then the monthly installments will also, it's going to serve the rental proceeds, whereby the customer rent from the bank this 90% equity of the bank. So for example, in a house, so 10% of the house is owned by the customer, whereby the remaining 90% is owned by the bank. So the customer in this case will rent the the the, the bank's portion of the house. So throughout the tenure, so the rental proceeds here will go to the bank, and now the equity purchases is going to reduce the equity of the bank. So the proceeds is going to go to the bank as well. So if you can see here, what is meant by musyarakah mutanakisah is, for example, this is a graph of ownership. So this is the tenure, tenure of financing. For example, we take 20 years, 20 years. This is the equity, equity on the house or the property that has been purchased by the partner. So this part is equity. So in this case, we see it from the bank's perspective. So the ownership of the bank is going to be reduced from year to year. For example, here the banks own 90% in the first year. Maybe in the second year, after the customer make the monthly installments and make the equity purchase, so the bank's ownership is going to be reduced to 85%. So bank's ownership on that property is going to be reduced to 85% on the second year. And then on third year, it's going to be reduced again to 80%. So from year to year, so the equity or the share of bank on the property is going to be reduced to, until the end of the tenure, it's going to be reduced to 0%. So at the end of the tenure, the customers, if we see on the reverse side here, so the ownership of the customer is going to be 100% on the asset or on the property. So the equity here will be transferred, the 90% will be transferred to the customer, because each and every month the customer has already made the equity purchase from the banks. So that's how the musyarakah mutanakisah home financing being applied to home financing products offered by the Islamic banks. The similar structure can be found either in sukuk arrangement, or in trade financing, or in maybe term financing, if the bank will, if the corporate customer would like to purchase factory or machinery. So all products can be structured using the musyarakah mutanakisah, especially if the products involved in the purchase of an assets, such as house, factory, maybe automobile or vehicle financing can also be used, these contracts. So next we move on to the Istisna home financing. So Istisna home financing is utilized for a customer who would like to construct a specified asset at a pre-agreed price consisting of cost price plus profit margin determined by the bank. So this agreed price is going to be payable on a deferred payment basis. So both parties, the customer and the bank, is going to sign a contract which is called as Istisna sale agreement. So in this case, the customer is going to act as a buyer or sani, and the bank is acting as the manufacturer or the mustasni. So the bank do not have any expertise for the construction of the house, for example, in this case house financing. So what bank will do? Bank will appoint a contractor on his behalf to construct the asset as specified in the Istisna sale agreement, and the bank will pay to the contractor by installment. So normally what it's going to be do is after the completion of certain level of the house, for example 25%, so the bank will make payment to the customer, to the contractor, and then both bank and contractor also sign the Istisna purchase agreement. So this is normally we call as a parallel Istisna. Parallel means we have two layers of Istisna is signed simultaneously. So the first Istisna is between the customer and the bank, and the second Istisna is between the bank and the contractor. So upon completion of the asset, contractor has completed the construction of the asset. So the contractor will deliver the completed asset to the bank, and at the end of the arrangement, the bank will also deliver the asset to the customer. So this is how the Istisna sale agreement, Istisna house financing being offered by the Islamic banks. So normally Istisna sale house financing is normally offered to customers who have their own piece of land. So the land is actually owned by the customer, and the customer would like to develop or construct a house on that piece of land. So with that arrangement, the customer will approach bank. So the bank will offer customer the Istisna house financing products. So that's how the Istisna house financing work. So the most important thing is because Istisna is a sale of something which is not existed yet. So in this case, the characteristic or the features of Istisna requires that the characteristics of you mentioned here specified asset. So the characteristic of the assets must be properly explained in the Istisna sale agreement. Then the features of the house, the number of doors, the quality of the doors used, and then the square feet of the house. So all these detailed characteristics needs to be put in the Istisna sale agreement, so that it will remove any uncertainties in the transaction. So when the contractor delivers the asset, the completed assets, so the purchaser here, in this case the customer, will need to verify whether the completed asset is similar to the earlier agreed specified characteristic being agreed in the Istisna sale agreement. So if there is any variation, if there is any difference from the earlier characteristic being agreed in the Istisna sale agreement, so the customer can always raise this issue to the contractor. So that's how the Istisna house financing works. Next, we move on to Tawarruk. Tawarruk can be offered under the house financing, or personal financing, or working capital financing. So in this case, the customer after receiving the request from the bank after receiving the request from customer to purchase the commodity. So Tawarruk is is related to a commodity transaction, commodity purchase transaction. So in this case, in the case of financing, so customer will first normally will request from the bank to purchase a commodity. So the customer undertakes to purchase a commodity from the bank whenever the bank has already owned the commodity. So with that request, with the customer's request, so the bank purchase the commodity from the commodity broker. So we say this as a commodity broker A. So as a counter value, so the bank will pay the purchase price of this commodity to the broker. So the bank pay using its own money. So with that payment, so the ownership is transferred to the bank upon the purchase. So this is the first leg of the commodity Murabahah transaction. So first, bank make payment of the commodity. So the quality of the commodity and then the weight of the commodity and the price of commodity need to be agreed between the bank and the broker, because here this is the first leg of the Murabahah transaction. Sorry, this is the first leg of the purchase. Purchase. So the bank make the purchase. So this is the first leg. And then in the second leg, after bank owns the commodity, so the bank upon the request of the customer, the bank will sell the commodity to the customer at at the Murabahah sale price. So this is the second leg of the transaction, whereby the banks, after having ownership on the commodity, so the bank will sell the commodity to the customer at a Murabahah selling price. So Murabahah selling price, as we have mentioned, we discussed earlier. So it is a cost plus profit transaction. So the bank need to declare how much, or disclose how much is the cost and how much is the profit that the bank gain from the transaction. So with that transaction, with the conclusion of Murabahah sale contract, so the ownership of the products or the commodity is transferred to the customer. So in return, the customer need to pay the commodity on a deferred payment term. Deferred payment term. And then the customer will sell this commodity to a broker B at a purchase price. So customer will sell the commodity after having ownership from the commodity. So the customer will sell the commodity to the broker B. So the price of this commodity here, the commodity is the same price as the amount that the bank purchased from the broker A. So for example, the purchase is for 100,000. So the sale amount here is also similar to 100,000. So from the sale transaction here, the customer is going to get a cash amount of 100,000. Customer will get cash here. But at the same time, he have debt that he need to settle on deferred payment to the bank. So for example, customer would like to purchase a house. So the amount or the sale price of the house is 100,000. This is the financing amount which is required by the customer. So the customer will make request from the bank So you need 100,000. So the bank, with that request, bank will purchase a commodity equivalent to 100,000 ringgit, and then they sell the commodity to a customer at a price of 100k plus the profit to the banks. For example, another 100k, which is paid to in maybe 20 years, yeah, paid in 20 years on deferred terms. So the total is 200k. The debt of the customer to the bank is 200k. So subsequently after that, the customer will sell the commodity to the second trader or broker B at a cash price of 100,000. So with this cash price 100,000, so the customer will make payment to the house developer or the house vendor. So that is how the tawarruk products works, either in house financing or personal financing. So for personal financing, this 100,000 is going to be utilized by the customer for its own purpose. For working capital financing, so the corporate customer, the business customer will utilize this 100k for its working capital needs. Next, we move on to the ITAP automobile financing. So ITAP automobile financing is actually utilizing the contract of ijarah and also the contract of sale. Yeah? So there are two contracts in this arrangement. The first one is ijarah, al-ijarah, and then the second one is al-bay' or sale contracts. So in this case, in the first leg, the bank will make purchase from the car dealer. Yeah. Subsequently, the bank, after owning the car, the bank make payment to the car dealer. So bank owns and then banks own the car. So bank will hire the car to the customer. Customer here is acting as a hirer, and the dealer will deliver the car to the hirer immediately, and then customer will make payment according to the agreed rental price for a specified period. For example, the specified period is 108 months. So customer as hirer will pay to the bank for 107 months. Yeah, it's normally like. So the total financing tenure is 108 months. 108 months. Yeah. So for 107 months of the period, the payment is going to be treated as ijarah. Yeah. As ijarah. Whereas on the 108 months, so this is going to be treated as the sale price of the transaction. So this is where the sale transaction happen between the bank and the customer. So who owns the car during the ijarah tenure? So the car is owned by the bank. But on the 108 months, when the customer make the 108 payment, so the ownership is going to be transferred to the customer. So this is how the ITAP automobile financing works. So that's all for our today's week discussion. So with that, I hope that you can get benefits from this discussion. So I would like to recap what we have discussed today. So first, we discussed how Islamic bank is unique from the conventional banks. So if you can see in the previous slide, we have discussed about the specific nature or specific contracts which has been applied by the Islamic banks in its products offerings. So this each and every contract has its own features and characteristics For example, in a debt-based contract, so they have a specific characteristics and features. In equity contracts, so they also have specific features and characteristics. So all these contractual relationships makes the products offering of Islamic banks different from the conventional banks, whereby the conventional banks in most cases they used the debt-based contracts as its products offering. And then we also move on towards the types of Islamic banking deposits, and we also discuss several application of contracts in each and every products. And also we also discuss the several modus operandi of the Islamic banks financing, such as the musyarakah, mutanakisah, istisna, tawarruk, and also the murabahah, commodity murabahah transaction. So with that, I think it ends our discussion for this week. So stay safe, stay healthy, and be happy. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.